everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, keep in mind that all trades have risk, so you want to manage the risk side of things in a way that makes sense for you. We'll go over some ideas in that regard as well if we go through some trade examples. Using the order window in our web trader and app, it makes it pretty simple to do the risk management because it calculates things for you as you're setting up your trades. Also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader here in the upper right corner, which allows you to trade on both MT4 and MT5 accounts from the same location. Our app also allows you to trade on both MT4 and MT5 accounts, and what you'll see in terms of trading tools that we go over in today's session on the web trader, those are also available in our mobile app, including the free signals, the market buzz, etc. So if we log in here in the upper right, we'll find ourselves in the web trader, and yesterday there was a bit of excitement surrounding the US announcement that came in terms of the interest rate decision, and the FOMC statement really was the bigger deal, which typically is, unless the rate decision comes in bigger or smaller than expected. Usually I'd say almost 99 times out of 100, the rate decision comes in as expected, whether it's 0.25% cut in the case of yesterday. On occasion, maybe a little more often than 1 out of 100, but on occasion the rate will be cut larger or smaller than expected. But in yesterday's case, it was as it typically is. It was expected to be a 0.25% rate cut in the US, and that's what indeed occurred. That's really not what moved the markets. It was the statement, the press conference afterwards, where Jerome Powell spoke about anticipation moving forward through next year, that because the economy has been doing as strong as it has and inflation hasn't been coming down completely as had been hoped in the US, that they're looking at maybe half the number of rate cuts next year than they were anticipating or wanting to do. Obviously, that's all data dependent. That could change by the next time they have a rate cut decision, depending on how the economy is doing and what inflation is looking like. But that created some jitters on the markets with maybe the anticipation of only 2 rate cuts next year instead of 4 rate cuts, or maybe smaller rate cuts. Instead of 0.5% at some point, maybe only 0.25%, etc. But now the anticipation is the interest rates staying higher longer than expected through the next year, and that spooked the markets a bit yesterday. And you'd say, well, why did the European market sell? Why did the UK market, the Australian market, the Chinese market, etc.? And the old saying, when the US catches a cold, the whole world sneezes. That was true yesterday in the markets, because the US market created some fear. The rest of the markets also sold off with the US market. Now, I think that initial fear has kind of calmed. The volatility index went flying up yesterday. It's also gone flying back down today. So there's a bounce occurring on many of the markets and instruments, and we'll see that on the charts when we take a look. But now we have to look at, well, what news is coming out today with the backdrop of maybe bearish pressure now that's still there, that wasn't there just a day ago or 2 days ago. So we'll keep that in mind, that there is some bearish pressure because of that news yesterday still being somewhat new in terms of anticipating maybe less rate cuts next year out of the US. So if we find maybe technical signals saying to sell, and we like the entry points, maybe they look a little bit better with yesterday's news. Whereas if there are buy signals on certain instruments and the entry point isn't great, maybe you shy away from those signals. So we can still use the technical analysis and the signals that come in, but we're going to use the backdrop of yesterday's fundamental news to maybe help you pick and choose which signals you think are best. Now, what other economic news is coming out? Let's take a look at the economic calendar found in the discovery section here. And we should be aware of what's happening in the moment, not just what happened yesterday. So if we take a look at our economic calendar, we can do some data crunching, some analysis of what happened with the past movements when the various announcements came in, and we'll see which announcements today we can analyze once the calendar loads here. And you just have to make sure once the calendar is loaded that you pick the countries that you want in the filter, pick the date range that you want to look at, and that helps simplify your view. So I'm only looking right now at today's date, the 19th, and I only have the countries chosen that I'm interested in. The G7, European Union, US, etc. The main larger economies are the announcements I'm more interested in looking at, but you can pick and choose the ones you want to activate into the calendar. And also, maybe you leave out the low potential announcements. They tend to move the charts less. I tend to look at the high level the most, and sometimes the medium level announcements in terms of importance. Now, we have a rate decision coming out of Great Britain. And just like yesterday, it might be less about whether they keep the rate the same, unless it comes in different than that, right? If all of a sudden the expectation is that the rate stays at 4.75 and they lower it or they raise it, then you'll probably see a big reaction. In general, if this came in higher than expected, you'd probably see the pound strengthen. It's the general effect. Timing is another thing, finding the price and the entry point that you want. If this comes in lower than expected, if the rate is lowered, which I would think might be more likely than raising it, if it comes in lower than expected, you might see the pound weaken rapidly against other currencies. But if it comes in as expected, like it usually does, we can see what has happened in the past under these different circumstances. So whichever currency pair we want with the pound, I'll leave it against the USD for now. We can pick the time frame we want after the last announcements. You see the date of the last time the GDP numbers came in, and you see the amount of movement in the time frame after the announcement that we choose. So we can go as little as 5 minutes, as much as 4 hours. And then I can qualify this. If this came in above forecast, what happened in the past? Well, as we said, that rarely happens. Usually they have a pretty good bead on the prediction as to what the rate decision will be. It hasn't come in above forecast in the past year of data that we have here. How about below forecast? No, that hasn't happened either. So each and every time it's come in as predicted. So if it matched the forecast in the past, what happened? And it looks like half the time it went down and half the time it went up. So this many times is the case with interest rate announcements. They come in as expected, and the movement is unpredictable. Why? Because the movement is based more on what they have in the meeting minutes or in the press conference, what's said. That typically is what moves the market, and you don't know for sure what they will say. So if it was only about the rate decision, you would see statistics that are maybe more predictable here than 50-50, 57-43. That doesn't convince me. 4 up and 3 down. That I might as well flip a coin to trade on that. So unless you're going to pay attention to the meeting minutes and read through them and understand what's in the meeting minutes, that's probably what will move the market one way or another. Just like yesterday's press conference after the US rate decision is really what moved the markets. Okay, it was what they said about future rate cuts maybe being more limited moving forward than they thought they would need to be, and that's what strengthened the US dollar and caused the equities to sell off, etc. Okay, so this is a little harder to trade off of them, and you can see it in the statistics. 50-50 under different conditions or most of the time not coming in above or below the expectation doesn't give you much opportunity here to trade off of the rate decision. Okay, so let's move on to other announcements. So the calendar can be used not only to see announcements that you want to trade on, but also ones that maybe are not as predictable and opportunistic to trade off of. Okay, many times these interest rate decisions, it's better to wait, see what the huge movement was, and see if maybe you can find an entry point, maybe for a pullback if you think that the pullback will happen, like has occurred with the Euro USD, USD Canadian, GBP USD, huge pullbacks now after the strengthening of the US dollar yesterday. If you caught those low points on the GBP USD, Euro USD, etc., there were nice movements back up. Okay, and maybe many times that's maybe what you wait for after these announcements. Okay, now if we move forward to some other announcements that maybe are more lend themselves more to trading off of the actual numbers as they come in, maybe we look at manufacturing numbers, GDP out of the US. All of these numbers are coming in at the same time. Okay, so the manufacturing, there's been quite a focus on manufacturing to see what's happening with it. And if we look at all of the events, okay, whether it comes in above expectation, below expectation, 4 hours after the announcement for the manufacturing, the USD strengthens no matter how it comes in, 75% of the time with over 40 pip range movement. Okay, and in the first 5 minutes, only 12 pip, 13 pip range movement, and half of them went up. You see, it's 50-50. Half are up. The ones that went down average range movement only around 13 pips, and after 4 hours, almost all of them are down, and the ones that are up very little. Okay, so this looks like if you were just, after every time this data comes in the first 5 minutes selling, at least in the recent history, you would have won 75% of the time, depending on the entry point you grab. Now, let's qualify these. What if it comes in above forecast? Okay, 57% of the time it dropped. And I know that looks like 50-50 data. It's almost 50%, 50%, but look at the size of the drop compared to the size of the rise. So yeah, it went up 3 times and down 4, but the ones that went down larger than the ones that went up. So when this came in above forecast, we saw in general strengthening of the US dollar. Okay, and if it's below forecast, also strengthening of the US dollar. So it's interesting that there's volatility around this announcement to the point that the US dollar strengthens regardless of how this came in the past. Now keep in mind also that yesterday's announcements is creating a strengthening effect on the US dollar as well. The US FOMC committee and the statement from Jerome Powell talking about less interest rate cuts than expected maybe in the coming year out of the US, that's serving to cause the US to strengthen a bit easier. So it looks like after this manufacturing data, just important data coming in general has caused the USD to strengthen around the manufacturing data. Okay, and we could look a little closer at some of these others, GDP, and see maybe this needs to be qualified. If it comes in above forecast, USD kind of flat. It went up, but not much, right? And if it comes in below forecast, USD strengthened. Okay, so that's something to keep in mind. Bad news on GDP caused enough fear to cause the USD to strengthen is what it looks like here. So you can start to analyze how these come in and know in advance that if the data comes in a certain way, the statistics show I should sell or I should buy, depending on the entry point I can grab. Okay, and the home sales have really been a focus out of the US. If we look, this data is coming in an hour and a half after the GDP data and manufacturing data. So existing home sales, if we take a look at this month over month data, we might see something interesting. Above forecast, USD strengthens 83% of the time. Now, this is something I'd be more interested in trading on. There are a number of data points here, and that's a high percent movement from the past in the hours following the existing home sales coming in higher than expected. 83% of the time, the USD strengthened and moved average range movement of over 33 pips. Okay, and in the first 5 minutes, average range movement only 7 pips, and a couple of them went up. So very little movement in the first 5 minutes. You could get your trades off, and after 4 hours, majority of them down, range movement 33 pips. Okay, so you just want to look for the entry point, but it looks like the direction is quite predictive if this comes in above forecast. Now, below forecast, we see the exact opposite. 83% Euro climbs against the USD. So we see a direct relationship here more than those other announcements. So I might lean towards this announcement more than the other announcements. And it could be because this happens because there are less announcements at this time. So you can focus on just the data on this one announcement, whereas the 3:30 announcements, 3:30 my time, we see there's GDP, manufacturing, jobless claims, okay, all of that's coming in at the same time, and they might conflate each other, contradict each other, and that's why you get movement that's less predictable. But when you look at an announcement that stands alone more, housing data, or 2 out of these 3 announcements are the home sales data, then you get a more predictive movement many times. Okay, so I would be focusing on today's US announcements, largely on the home sales data, if I was going to trade off of one of these announcements or even more of them. Okay, now we could go into tomorrow's announcements as well. And what we see, a number of important announcements, and I think we can focus on retail sales out of Great Britain. This tends to have a pretty predictive effect. If this comes in above forecast out of Great Britain, look at 63%. It's almost 2/3 of the time the pound strengthens against the USD in the hours following the announcement, with a pretty big range movement, over 40, 41 pips, 2/3 of the time up. Okay, and if this comes in below forecast, it's the opposite, 75% of the time down, with over 46 pip range movement on average. Okay, so another strong relationship that gives you predictive directionality. Opposite direction if the opposite result happens. Below forecast, 75% of the movement down from in the past. Above forecast, almost 2/3 of the movement up. Okay, so that's a nice one to look at and be ready to trade on maybe tomorrow, the retail sales out of Great Britain. We've got PPI data out of Germany, also high-level announcements, and we could come down and look at retail sales out of Canada. Tend to be pretty strong, predictive, and look, it's because there are no other announcements at that time. Nothing to confuse the movement. It's all about retail sales at this hour out of Canada. Now, we do have US announcements at the same time, so that actually could confuse things. We're looking, these are all at the same time. Let's see the predictability of the retail sales out of Canada. And what we can do is take the US out of it and just look at Canadian JPY. So the US announcements maybe have less of an effect because we took the US dollar out of this pairing. And now we say, if this comes in above forecast, 50-50 movement almost. That's not so predictive. Below forecast, 60-40, no, not so strong, not in my opinion. And again, it's because these are at the same time. We've got, the Canadian announcements are pretty clear. It's only about retail sales, but it happens to be at the same time as all these US announcements. So they can all push and pull on each other. If some come in better than expected, worse than expected, it can cause some overlap. If we jump ahead to the Michigan consumer sentiment, now that is a standalone announcement. It's coming in separate from all of these at a different time. There's nothing else coming in at that time. I suspect we'll see predictability better here on the consumer sentiment. If this comes in above forecast, wow, look at that, almost 80% down. So that's a really strong one to look at for predictability. If the consumer sentiment is better than expected, US dollar strengthens. Makes sense, right? And if this comes in below forecast, we see the opposite. 2/3 of the time it goes up with pretty large movements. So predictability really strong on this announcement as well, depending how it comes in with the Michigan consumer sentiment. So we can see those standalone announcements seem to be much more predictable than those that are confusing multiple announcements at the same time. Okay, so I really like the looks of this consumer sentiment as well. So we've found 2 or 3 today and tomorrow in combination that really look solid for predictability. Okay, any questions, comments? I'll pause for a moment before we leave the economic calendar. Okay, so we'll move on. I don't see any questions popping up, but if you have one that arises, I'll have my eye periodically over at the chat box. Okay, so where else can we look for fundamental news? And one place that we can look besides the economic calendar is the market buzz. And the power of this tool is the fact that it saves you a lot of time. Not that you couldn't go on the internet and search for the latest news on a particular stock or a particular commodity, whatever it is that you're interested in trading on, but it would take you a lot of time. I mean, I can really quick come here and say, okay, Apple has 565 mentions online that we found with this system. I can quickly pull that up. I not only can find those articles really quick, the most recent ones listed first, so it's the most relevant recent news that might move the market in terms of this stock, and I get a technical prediction as well. The expectation after yesterday's big drop is that there could be a bounce here on Apple stock of 4.5% or so. We can look at the technical analysis of that. We see that it's expected to rise up to a certain level. We see the support and resistance levels as well. Also, we can take a look at, what is the recent news that came in? And as you scroll down, you might find headlines that look more important than others. It looks like Apple is looking to do some deals with AI integration into the iPhones. If they strike a deal with these companies, looks like Tencent and BitDance, if they're able to strike deals, that could be positive news for Apple. So you might want to read that article. It came out only 2 hours ago, so this is new information. You click the link, you get a summary of it, and if you click story continues, you get the actual source. It takes you to the website and the whole article for you to read. Okay, so very easy to use, quick to find information. And I saw something down here about India as well that looked important. Apple to introduce AI tools for China, partnering, this is the same story. And this one points out, without reading the whole article, that this is focused on the Chinese market, these AI tools. So that's interesting. So you could read from 2 different sources, the same headline. That came out just 3 hours ago. And it's worth scrolling down to look for other headlines. And you could see some other information that maybe you weren't aware of as well. And I know I saw something down here about the market in India as well. Here's some information about bigger screen, improved camera, efficient performance expected. That sounds like good news again for the iPhone. And that news came out just 4 hours ago. And so you can go down, maybe for the last 12 hours, you go down and you start to read through these articles of what's come out in the last 12 hours until you are convinced one way or another whether you think that's positive or negative for when the market opens in the US, because this stock won't be available until the market opens in the US. But you can see there's information about subscription service, on and on. And so I would recommend taking some time before you trade on a particular instrument that you look at what is the most recent news in the past news cycle. And here it is 9 hours ago, and it's not India, it's Indonesia. So Apple's $1 billion investment may soon end Indonesian iPhone ban. So that again sounds like new information that's positive. ending an iPhone ban sounds like good news, right? So you can click and read that whole article and see what the expectation is on that ban potentially being lifted out of Indonesia. Okay, so all around, just from the headlines without reading the stories, which I would read the stories if it wasn't a webinar. You go through and read them, and maybe take it 10, 15 minutes to read 3 or 4 of those articles. Then that might convince you to trust this signal. And that's what I was saying as we started. You can use the signals for directionality and technical breakdown, but also make sure the fundamental news backs that up. So now we might feel, okay, fundamental news backs Apple maybe rebounding after yesterday's negative movements, and we'd have to check the chart to see how far did Apple drop yesterday, if at all. I know not everything dropped. And then when the market opens, if you like the entry point based on this signal, then maybe you make your move, because then everything lines up, the fundamentals and the technical signal. Okay, I'll pause for a moment. Any questions on the market buzz feature or the trend analysis as well? Okay, great. So what we could do is maybe take a look at a chart and go through maybe a trade simulation based on what we know of the current news situation. So, the economic calendar trading, we have to wait for those announcements to come. So that's a strategy we went through. The market buzz feature, okay, we looked at one example, Apple. Maybe I'm interested in buying on Apple based on those headlines, and if I read those articles, that's a second strategy. Finding the most recent news on whatever you're interested in trading on, read it in advance, and then check the charts. If they're already moving, then you can jump on the chart right away. If the market for that particular instrument isn't open yet, then you wait for it to open and act if you like the entry point. Now, we could go through a third idea, that is trading off of what we already know from yesterday's news. We know that there's reason for the US dollar to be bullish, okay? And we could go to something like USD Canadian or Euro USD to take a look at what's happening with the US dollar. And so what we see here on the 30-minute candles, this is the strengthening of the US dollar yesterday. Okay, that was when the rate decision came in. And again, it wasn't so much about the rate decision, because the US cut the interest rate. Okay, so that typically doesn't strengthen a currency when you cut the interest rate. But what strengthened the US dollar was, in fact, the tone that Jerome Powell had right from the get-go, right from the start, about being not so interested in rapidly cutting interest rates next year. And so that caused some fear and a rise in the strength of the US dollar. Now, it's an overreaction maybe. You see the pullback. This was the pullback I was talking about. It looks like the pullback has stabilized. Okay, there's the pullback, and it formed some support on the 30-minute candles. So we now have a resistance level up here from yesterday's high, and we have a support level from the pullback. So if you were looking to go with yesterday's fundamental news, it didn't change. The US still feels the same way they did yesterday about less rate cuts moving forward than anticipated. So that's still bullish news. If you think that this might try to retrace back up towards yesterday's high, then maybe you've got a nice entry point after this pullback. Okay, so I'm going to trade with yesterday's fundamental news in the direction that the fundamental news tells me makes sense. Okay, that is to buy on it. We saw that the manufacturing data, different data out of the US, regardless of how it comes in, when we looked at it, it was causing the US to strengthen in the past. Just because there was big news coming, the US strengthened regardless of how it came in when we looked at it on the economic calendar for those announcements that are coming in just a couple hours. So maybe the fundamental news in a couple different ways supports the fact that the USD might re-strengthen over the next few hours. Okay, even leading up to those announcements, because there's uncertainty as to what will those announcements be. So that also could create some fear. So for fundamental reason, we might anticipate this could re-strengthen. Now, technically speaking, maybe I put my stop loss just below that support level. So that's a small risk. It easily could break, pull back down further, and I take a small loss. No problem. So let's measure what my risk is. So if my stop loss is below this support level at 143.75, okay, that's my stop loss. I'll draw another line to represent that. 143.75 is right about there. Okay, so I'm below the support level with my stop loss. It'll have to break the support for me to lose. And I'll risk the amount that I'm comfortable with in a second. We'll adjust the trade size. Take profit, you could put it before yesterday's high, or what I might do is there's a little resistance level right here. I might take profit here because we see once it came down, it tried to break back above here and had trouble and dropped further down. So if this does climb, it might find resistance here first. So without being greedy, I'm not going to go for the high point. I'll go for an easier spot to reach, 144.38 for a take profit. Okay, so I've got my technical plan of where I want my stop loss below the support level, where I want my take profit just before the resistance level here. And I see that my potential profit is about 5 times what I'm risking. Okay, but I don't want to risk maybe that much. So now I adjust my trade size to be commensurate with the amount I'm comfortable risking. So you see how easy it is to calculate my risk. Maybe I'm comfortable risking 1% of my account here. So that would be around $615. So I could go 5 lots and I'm risking 400, go 7 lots and I'm risking 569. Maybe I'll go 7.5 lots and I'm risking less than 1%, about 530. So a good deal under 1, and I'm looking to make much more than that. Five times, in fact, approximately the possible profit compared to risk. All right, so in that case, I'm trying to make around 5%, risking less than 1%, and I make my move. Okay, now obviously no trade is guaranteed to profit, so I'm managing my risk. I've got my stop loss in a place that technically maybe makes sense. If it breaks this little support level, which it easily could, then that confirms a further downtrend, and that's why you might have your stop loss at that point. Okay, now the same trade I could do in another way, and this gives me a bit more flexibility without having to put a stop loss initially. So I might also say, okay, I'll buy on this, and instead of, and I'm going to put the same take profit, 144.38. Actually, I'm going to go a little higher to the second level, 144.62, let's say, just before yesterday's high. So take profit 144.62. And now instead of putting a stop loss, I'm going to use AvaProtect because I feel this might break that support. I might lose that small risk here on that first trade, but I think it might break and then eventually go back up. But I don't necessarily want to put my stop loss way down here to avoid the dip. So AvaProtect is a unique way to protect this. I might even do all the way to tomorrow and do 1 day's full protection or even 2 days full protection. So it has time. If it dips and hits my stop loss on the first trade, this trade I can stay with it for a couple days without risking anything more and wait for it to come back up. Okay, so my risk is only the cost of the protection. Now I need to lower my trade size. If I do 1 lot, it's about 300. So I could do like 1.8 and risk the same amount I'm risking to my stop loss. So less than 1%, around 550 with that trade size, about what I'm risking to the stop loss on that first trade. So same amount of risk, and this risk I pay up front as a payment for the protection. But look at the possible profit now. If I go to 144.63, my possible profit is almost double what I'm paying for the protection. Okay, paying for protection less than 1%, potential profit about 1.8%, something like that, 1.7%. possible profit on the account. Now, it's not as much as the first trade, but it's more secure in the fact that it's not going to hit a stop loss in the first hour, maybe. I have a couple days to wait this out. So just a different way to go after the same trade, compromising on the possible profit amount, but now having a lot more patience that I can have with the trade, because I don't have a stop loss that I have to put. I can go later when the protection is nearing its end and add a stop loss if I want. So I've got the move divided between two trades on the same instrument, trading it with two different risk management plans, both of which, at worst case, I'm losing less than 1% per trade, and at best, I'm making 2% to 5%, somewhere in that range, depending which trade might potentially profit here. And if they both profit, then even better. But this is a way you can go about trading in the direction of the fundamental news, but managing risk in a way that makes a lot of sense for you, and having a potential of profit that sometimes, because of the opportunistic entry point from a technical standpoint, the potential profit sometimes can be much better, much larger than what you're risking. And so if you're profitable on trades like this, even 30, 40% of the time, you can have huge profit in the end. Okay, I see a question, Franco, from you. Why do commodities not have trend analysis in the market buzz? If it's not in the market buzz, you can find it in the signals. So for example, crude oil, the trend analysis is the same as the signals. So I go here, I see crude oil has this little symbol, which means that there's a live signal on crude oil. So the commodities do have the trend analysis. If you click then on that, it loads it in the order window. And what we see is the live chart with the live price and the trend analysis. So it's a buy, it's expected to go up. The expectation is that it'll challenge these resistance levels up here, and that this might be a spot to take profit. That's the suggestion here on this signal. Okay, so you have the pivot line down here. If it breaks below the pivot line, then they're saying sell. That's the sell scenario. If it drops below that price, they're saying look for further downside towards these support levels. So as long as it's above the pivot line, they're saying buy, take profit somewhere in this zone up here, because that's where there's resistance from the past. So you do have with the commodities, and I assume gold also will give you a signal as well. There's almost always a signal available on gold. So if we click on that, same thing, it's a buy signal with the pivot line down here, with the expected price that gold might reach around 26.42 or a little lower than that for the take profit zone. Okay, good question. I don't know why sometimes it's not in the market buzz for some instruments, but it is in the signals, but that's a second place you can look. Good question. And I'm sure there are other traders that might have been confused by that as well. Okay, great. So thank you all for joining. Good luck with your trading the rest of the week. I'll be back at it with my next session, should be next week. I do an evening session on Wednesdays and at this time on Thursdays. Now next week, Wednesday is Christmas Day, so that session is delayed to the following week, and the Thursday session will run on the 26th. Okay, and actually the Wednesday session is delayed 2 weeks off because the following Wednesday after Christmas is New Year's Day. So those both being holidays, those Wednesday sessions the next couple weeks won't happen until the week following New Year's Day. All right, everybody. So good luck trading the rest of the week, and hopefully maybe you can find some movements with these announcements later today. All right, bye for now.